main topic today is post-COVID due diligence for global startups. Let me introduce Brett and Catherine. Brett is the founder of and CEO of UnVentures, and Catherine Yushina is the venture partner of UnVentures. They are very experienced in venture funding. They're very well connected. This is an American venture fund, and I will let Brett and Catherine to present themselves in greater detail, so I don't miss anything. And I'm very excited, actually, the guys found the time to share it with our global community. So as a little bit about Go Global World community, this is the community for founders from around the world to help each other to go global and basically move their business to the next level through support to each other. Basically, when you join, you gotta help each other and participate in our events, communication, everything that helps community to grow and help members to actually get their business to the next level. Our past events, we had a lot of amazing speakers like Bob Dorf, like Bill Reichert, venture capitalist as well. Recently, Ilyas Tribulaev has presented, and many more. Yesterday, we had Donna Griffith, who were talking how to craft the best pitch deck that really works. Her pitch decks raised $500 million. So these are all decent people, and today is going to be also a very high level, like very important information. So you guys pay your attention to that. Well, quick update about upcoming events. In a couple of days, we will have a live pitch to global investors on Monday, June 22nd. If you're a startup and would like to pitch, there will be US investors, VCs, and angel investors joining us, and you'll be able to pitch them and create an interest from them. And at least you will get a very high, very quality. So just quick update, who's going to join. We have Red Smiths, 500 Startup, UnVentures, and many other interesting, very interesting investors. I'm really excited about that. You can also join as just a general audience to watch it, to learn from them. And if you're an investor, you can also sign up as an investor to join the panel. We have all different tickets, and it's all free. Also, Steve Hoffman, the other great speaker, is joining us next week, and he will talk about how to raise capital in Silicon Valley and, very important, in China. So use this opportunity to learn how to do that. Kate will talk in July how to get to 500 startups after all this pandemic and the recently newly formatted program has been launched. We will have another part of history of Silicon Valley. It's been very interesting for participants, and Evgeny will share it again. It's going to be as engaging and very interesting, so take your chance. And the other speaker, Rod Tuvaev, he will be talking about regulatory requirements for United States and auditing your startups for qualifying for investments. So this guy is very smart and will help you to be prepared for funding in the United States. And this is going to be in July 10th. Also, we will have our first Go Global meetup, monthly meetup for founders in English. So make sure to join, because this will be an international networking event, and it's going to be very interesting and might be helpful for your startups. The same event we'll have in Russian but in the end of this month for Russian-speaking community, and it is also an international one from many countries. If you like our events and you want to join them, just simply scan this QR code and just follow our social media, basically. About our partners. So today we are partnering with UnVentures. They the main people of this event, but also we have other partners: Rusbase, IB Consultants, Skolkovo Technopark, GSD Venture Studios, and Moscow School of Management, Skolkovo. So just join our Facebook page, Go Global World, find your group of your country, and this is just an example of local communities that are part of our global community. And if you in a Russian-speaking part of the world, so you can join our Telegram channel, Go Global Russia in English. We're also on LinkedIn, Go Global World, and this video will be posted on our YouTube channel, Go Global World. So once you see it, like it, share your opinion about what you saw, so we can have a discussion on YouTube, and share it within your social media so other entrepreneurs can benefit out of this free content. And basically that's it. I'm very excited to our event. So I'll let Brett and Catherine to introduce themselves and continue on the topic. Thank you very much.
Excellent. Thank you. Should I start or Catherine?
Yeah,
you can start.
You can start.
Hello, I'm Brett Noyes, founder, director of, and partner, and janitor at UnVentures. So wear many hats like most people in kind of the startup and the venture space. Yeah, I mean, I think the best way to kind of tell myself is kind of go back a few clicks. So I originally got started, well, I guess I've been in the entrepreneurial space kind of my whole life through growing up in a family that was in entrepreneurship. Started my career in 2008, right as the financial crisis started. So for everyone who's struggling right now, I completely understand. I went out to Wall Street to get into financial consulting as it all went under. Had to come home, started a few brick and mortar businesses where I quickly learned about businesses that don't scale, which led me to being a startup, weekend community founder, starting an angel investment group in the Northwest. And then kind of where my career in venture really kind of took off is when I moved to Silicon Valley about 6 years ago. I got my big break working for Jason Calacanis, who runs This Week in Startups, famous for being one of the first angel investors at Uber. Cut my teeth, vetting companies for the demo pit there and launching his first incubator. Did well enough to impress some people that worked over at Draper. So I got to be the head of business development and partnerships over at Draper University. And this is another one of those jobs where I wore many hats. So I worked with the university side, the Boost VC accelerator. I worked with the co-working space. I did business development for the Draper Venture Network. And that's where I met Catherine. So she'll tell you more about her background, but she was working for the Aurora Fund, the Russian-based fund. That's where we met. We're great colleagues. Always wanted the opportunity to work with her, but our paths took two different ways. So when I left there, I started UnVentures, and we started a fintech incubation program where we worked with 45 companies in the fintech space throughout the world. Catherine will tell you about what she did during that period of time, but she also has been helping us from day one with vetting companies. So as luck would have it, our worlds converged about 6-8 months ago. We decided to move from an incubator model to a syndicate model. So right now we work with over about 400 VCs where we syndicate deals to them weekly, where we work with a series of angels, and we make direct investments through SPVs. So I don't know if all that makes sense, but that's me. I'll hand it over to Catherine.
Thank you.
Sure. Yeah, I started my kind of entrepreneurial and VC journey backwards. I started with venture capital, working within the Team Draper's network of funds, specifically DFJ Aurora Fund. Then I quit my job and started a company and became a fintech founder. And my first company failed, as majority of them do. Great learning experience, and I continued working with startups in blockchain space and fintech and asset tokenization. I do work with groups of angels, vetting companies and deals, doing due diligence for early stage companies as well as pre-IPO companies. And yeah, we kind of reconnected with Brett. I've been a mentor and advisor to the accelerator for years at this point, working with companies that go through his accelerator. And yeah, we decided to switch to syndication, and we actually focused like what is it? Well, it was like 6-9 months ago. We focused on economy technology because fintech is dead.
Sure. I
And
like to say it's mature. The industry's mature and it's time to evolve,
Sure.
right?
Yeah. So we're focused on companies that and founders that actually building solutions that are bridging gaps in economy that we're seeing today. Because my favorite thing to say is like, hey, we're having issues with adoption of crypto. Why? Because majority of population doesn't know how credit cards work. We have these gaps that we need to bridge before we can move forward as a mass. So we're focusing on that right now, from small and medium business solutions to personal finance to future of work to data and compliance. So yeah, that's kind of my background.
Thank you. Thank you. So I let you guys start on your topic. It sounds like a very exciting topic, right, for startups, because lots of them on our community in the stage of funding. So I'll give you a little bit of a background of our community. We have founders from different countries. They are all on different stages, but we are all united with one goal. We all want to go global from our countries, and majority of them want to get to the United States, just because this is where the majority of the capital is. So very obvious.
Yeah. Well, I'll open up with a punchline, which is venture capital model needed upgrade way before COVID happened. And we've been talking about it for a while with Brett. And a big part of it, I feel like, is the due diligence process and the way we actually look and vet companies and what we're looking for. And I guess the most popular thing among investors is looking for high gross margins within companies. But I also feel like that at the same, I mean, it makes sense, right? We're always asked about how much runway do you have? Can you survive? How much cash is in the bank? Cash is king. But at the same time, I feel like it's taking away the focus from what's really more important, and that's defensibility of the business. And what is the defensibility of the business, right? It's not just IP. It's not just, making sure you're ahead of your competitors, but also like, how do you protect your business long term to make sure that you're leg ahead in the market? So yeah, Brett, any comments on that one?
Sure. No, I mean, I completely agree with everything. It was just, yeah, I mean, we just went through this really interesting, the longest, bull run in U.S. history, and maybe global, I'm not sure, and it was, there was definitely a focus on growth and these, gross margins. And then all of a sudden COVID happened and the economy came to like a screeching halt. And it's like, I just feel like we've got to return to fundamentals of like just business building. So, I mean, I think, especially for your audience, I feel like there's an advantage to, like, if you're like a stereotypical Silicon Valley company, right? You're all about growth, like you got big ego, blah, blah, blah. But I feel like it's like turned back to like real business builders. So, and I see that in like people that are not from Silicon Valley, people that are, we've worked with a lot of international companies, right? Where they have a different drive and a different focus on profit and like building like real sustainable companies. And so I feel like there's a great advantage for those companies. Are like the companies that were considered unsexy, 6 months ago, are like suddenly like, hey, we should invest in a company that makes money, right? So, and as you'll find out through this, I'm the high level guy, and Catherine's the more analytical one, right? So she can get into the numbers and the different thought process on that. But I just think in general, like, there's a great opportunity for real business builders.
Yeah, definitely. And like coming back to margins, I feel like that's an overlooked or overvalued point in terms of due diligence, because if you look at actual market and what it's telling us is, look at Apple. Their margins actually are twice lower than majority of software companies out there. And other companies that are actually doing really well and generating good cash, but considered low margin businesses, are Disney, Home Depot, Nike, Netflix. Something that you use every day. So I do think that we as investors and people who do due diligence, and founders also, we need to focus on building companies that can withstand what's happening around the world and external issues that keep hitting. It's like a spaceship that you're flying in the space. You don't know what's going to hit you next, but you need to have defensibility, and you have to be agile, and you have to be able to adjust as fast as you can. Um, yeah, and then Brett mentioned scalability, right? It's like, what is scalability? What is economies at scale? And we are usually, tend to fall into the whole unit economy, and how scaling affects unit economy and cost of acquisitions. But then I also wanted to suggest a new way of looking at it, as in how much negotiating power do you have as a business to negotiate with your suppliers and buyers and partners to actually get more favorable terms for your business.
So I'm going to throw something in there to add on that or to kind of counter that. So if you're an early stage company though, how do you get the, like favorable terms are generally something when you have, you're a larger company, you have more sway. So as a small company, like how would they get that advantage?
I do feel like it all comes down to differentiated offering, right? And how different is what you're offering to the market, to your suppliers, to your buyers, and what are the terms and the kind of logistics around that. Because when we talk about defensibility of the business and differentiation, like it's a whole different slide on the pitch deck, right? That everybody wants to see. How are you different from your competition? And yeah, we can talk about we're cheaper, we are faster, but at the same time, not everybody's going to have IP. Not everybody's going to have like patents. And we see it more and more and more now. Before it was a must. Like, do you have a patent pending? Now nobody really cares because majority of you probably have, but it's going to be dismissed. So how do you protect yourself? There's so much out there, and that they're changing the rules like for the past few years, right? What can be patented, what cannot be patented anymore. So I feel like a way to differentiate yourself and actually create this sort of negotiating power is a good question to ask yourself is, are customers willing to pay more, like to pay higher price for what you're offering compared to your competitors? Because if they do, then you definitely have a differentiated offering that is not, much better than what they're getting from everybody else, and therefore they're willing to pay bigger buck for it. So I feel like that goes to the negotiating power in the early stages. And again, on the early stages, it's also a lot about luck and network. Because I feel like that's one thing that we like to talk about. Like, entrepreneurs have networks, we have to have networks, we have to know people. But what does it mean to know and have network and have people, right? Because entrepreneurs cannot do this alone. And it's not just about being just a solo founder or just having too few founders or too few people on your team. It's also what's your surrounding, like who is helping you get there. Because I mean, I feel like that goes with the Go Global community, is like we all lift each other up, and without each other, there's not going to be like synthesis between businesses. So we're all working together. So figuring out these middle grounds and kind of how we can uplift each other, I feel like it's
I would say though, if you don't have those, build them, right? So my previous roles for Jason and for Tim were all about building partnerships, right? So it's like there's a lot you can do with like handshakes and just build, adding logos to and just building out those type of partnerships that could be very beneficial. Where people that have distribution that you don't have is like the way that I've always built things, is just finding someone else that has that thing and trying to convince them that they should work with me. And it's usually on a promise and a handshake and being likable, right? So
definitely. And also another thing that I feel like we should focus more and look into when we're talking to companies is, where's the traffic coming from, right? Because a lot of the times we actually see when we see the pie charts in terms of where the funding is going to go, there's usually a huge chunk of that goes into marketing. And it's like, oh, what's your go-to-market strategy? Oh, we're going to launch a gazillion of Facebook ads and Google ads. But at some point, I understand on early stages, you have to generate traffic, and that's probably the best way to go, but you cannot get addicted to it. Yeah. It's like, if you're not converting to organic traffic and, leveraging unpaid channels, then you're probably something's off. There is a problem with what you're offering.
I think a subset of that is product market fit, right?
True.
So I mean, in general, like you need awareness. And I feel like there's a lot of ways that you can get awareness through like free channels. Partnerships has been one that I've always hit. Building up your own list, putting on events. Like these are like organic ways of, seeing if people actually like your product. I feel like in the past, there's been like, there's obviously been a great emphasis on like how many users, or like they're kind of like vanity metrics. And I think we're going to see that go away. And I'm sure like, I think everything kind of goes in waves, but I think in the short term, like people are really going to be scrutinizing your metrics, right? Saying, oh, I have 10, like back in the day when it was like, oh, I have 10,000 or 100,000 people on my wait list. It's like, so what, right? Like, I think really people are going to want to know like how many paying customers
Exactly.
or pilots or whatever your metric is, but it's going to be way more focused on like, what's your path to revenue? How quickly can you get there? Do you already have it? How do you scale it, right? And telling that a convincing story around that is going to be much more important than saying, hey, we got this many likes on Facebook, or we've acquired this many free users with paid advertising. It's going to be something that's be like, I don't think that's going to fly as much as it did in the past, or not at all.
Definitely. And like going into traction, which is also a good point to bring up, is I don't know why it is not clear and it's like a recurring issue, right? It's like, what's your traction to date, or like what are successes that you're seeing so far with your business? And I get it, you're early stage, but there has to be something that shows that you're moving in the right direction, right? Whether is there a market product fit? Are you talking to your potential customers if you don't have any yet? And then again, Facebook followers are not traction. Please stop putting that on your decks. What is traction is conversion, because I mean, look at data. You can have 10,000, as Brett mentioned, you can have 10,000 people who signed up for like, oh, we're waiting for this product to come out. By the time you will email them in 2-3 months saying, hey, we're in beta or whatever, sign up and become actual users, majority of them are going to just unsubscribe and click, I don't remember signing up for your newsletters, so it's like, how do you interact with the market? How you keep it engaged? And that's all about back to community building and actually, creating some sort of value for the people.
I'm just going to throw this out there for discussion. Catherine and I have never discussed this, but I'm not 100% sure how I feel on this one, to be perfectly honest. But influencers. So I've seen a few different kind of more B2C based companies that have brought influencers on as advisors. These people have, tens of thousands of people that are following them on Instagram. It kind of, it seems like a neat hack. I think if you're paying for their influence, I might not be as impressed with it. But with these, I've seen some interesting ones where they've added an influencer to their advisor group and given them some equity, or I don't really know what the exchange is, but it's interesting. I don't know if it's good or bad. Thoughts, Catherine?
Yeah, I mean, if you're paying influencers, and there are a lot of platforms right now that actually facilitate, the whole find the influencer that fits your specific target market and has influence in there. I don't know. I mean, at one point, if you're some sort of leader in some sort of space, I get it that you're promoting companies or products for your following, but at the same time, like, where's the morality going once you start getting paid for it? Are you still filtering, or are you just promoting anything that goes into your inbox? And then the question and the risk here is, and I'm usually focused on the risks. It's like the risk here is, okay, now you have this big personality that's well known online that is basically promoting your business, and your brand is tied to them. What happens when they screw up? What happens when they piss off their following? And that happens. I mean, look at all those like makeup, scandals and whatnot. And they'll start bashing each other. Now influencers are like in war with each other.
I think there's a bigger risk for a small company. So like, think about like Nike has went through like a series of like Tiger Woods, and I'm sure a lot lesser people have screwed up as well, but they have a big enough bench, right? And like so that they can put but if you're a startup and you somehow, like, let's say LeBron James or somebody comes on as your influencer, if he gets himself in some sort of scandal, it's like, and your entire brand is tied to that, then you're probably done, right?
So it's like
you kind of like rise and sink with their popularity, right? So I think it's a risk on that.
For sure. And I feel it's easier for like companies like Nike, for example, because they have multiple people at the same time, so if one falls off, it's less of an impact, for sure. But if you're a small company and you're tied yourself to just one or even two influencers, like, yeah, you now basically have to babysit them and make sure that whatever they're
I,
posting is in line with your kind of vision
well, I mean,
and culture and mission
even
of
as
your
like
business.
a venture capitalist, though, it's like you tie yourself to certain like. So I mean, I obviously say I work for Jason, I work for Tim, right? But I've also worked for them, right? So I mean, I also know that a scandal could pop up, and suddenly I'd want to be like, oh, I've never been there, never met that man in my life. It's like,
It's like, I don't know
so,
them.
and then I specifically saw one with I mean, we worked with them as a partner, and we worked with them as like a speaker at our event. They spoke to like our cohorts. And suddenly this gentleman, I'm not going to name who it was, but got himself in, well, first of all, we were very excited because a very large, well-known VC firm invested in them. And then 3 or 6 months later, like a series of sexual harassment suits came out.
Mm-hmm.
And I've been bragging that we've been working with this guy for years. And it's just like, oh no, so that I think that's a risk on that. So I think we're diverting from the core of this subject.
Yeah.
But,
No,
but just in
definitely.
general, like, like who you tie yourself to is you're going to rise and rise and die with their success, right? But I think that's the biggest risk.
Yeah, definitely. But I feel like companies that I see, like early stage companies that are rising fast and growing better, actually don't tie themselves to outside influencers, but make their founders and their teammates, influencers, and basically thought leadership. Because when you talk to the CEO and they're pitching the business, but at the same time you understand, like, oh my God, they have their ear to the ground, they understand what's happening in the market, they're engaged, they're speaking, and what they're saying is smart, they're understanding. It's another point of validation. And there's one of these, like, I don't remember who said that, but like businesses are built on personality. And I feel like that's why the question of ego is huge among like successful entrepreneurs, right? And how do you really see that? But like, everybody knows Elon Musk, right? And that's a whole brand on its own and a personality that drives all these businesses. And there are a ton of examples like that. So I feel like if you want to, go for influencers and use that, I feel like you should become one. Just become one. Yeah. I mean, it's not easy, but yeah.
So let's what do you got there?
What I got there. I feel like the next, what flows into this discussion with the ego is also like failed startup experience, right? And I love entrepreneurs who have failed startup experience, because majority do, but we don't talk about it enough. And I've been talking about it recently, is that entrepreneurs' reaction to failure is natural selection in the world of startups. Because if you cannot handle failing, if you're not going to look back and analyze and kind of self-reflect and learn from it.
So where in the due diligence process should you talk about it? Because it's like you generally, I wouldn't necessarily put that on your pitch deck, right?
Well, yeah,
I got a graveyard or fail, right? But it's like where does that come up in the conversation with the VC?
I feel like when we're discussing the team, right? Because Brett knows I like to dig into the team, and not just, what's your skill set and where you worked before. Because I mean, I can see that on your LinkedIn, but again, working somewhere and like actually having the skill set are two different things, as practice shows. But also I like to see dynamics between the founders, between the team members, and like, because one of the biggest reasons companies fail is teams fall apart. There are always issues, especially when we're talking about directions, when you're like, have to pivot and where you're going, not everybody can be on the same page. But what's the dynamics? Is it an hierarchy? Is everybody kind of flat culture? How interaction is going? That's why I love when we do meetings with companies. Now it's Zoom calls, right? I love when there's more than one person from the team on the call. And just even seeing, when they start talking at the same time and get excited to answer the question, what's the dynamics there? Because that reflects a lot. And then, cap table, that's a deeper, like second stage of due diligence, right? When we look at financials and legal documents.
Well, talk more about that piece. I think one piece I definitely want to leave with people is, in companies that we've been due diligencing lately, we get to the point where like everything's good. They send the decks, blah, 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 really excited, really want to work with us. Really, we've got to move really quickly. And then I ask them for their financials. And then suddenly there's like days, weeks, or I never hear from them again. So, I mean, one thing I would just say in general, Catherine could add on to this, but have your, like, just be prepared. Like in general, like go, like we're happy to share. We have a checklist that we'd be happy to share with the community. But just in general, like each group's going to ask for something a little bit different. But if you already have your deal room, or you just have like a Google, file with all of your stuff ready, and when someone asks, you just fire it over to them, like that's when I know, like, oh, this company's serious. like they're grown up, like they know what they're doing. It's so I mean, and sometimes like people will ask for things that you don't have, and you'll just say, okay, I'll get that to you tomorrow, or I need to get that from my accountant, and then you stay up all night making it, right? If you don't already have it, right? But I think it's really important to have those financials, even if they're not favorable, even if they're not perfect, right? It's better to see them. It's just like we're gonna invest money in you. It's like it's a bare minimum you should have in many companies, and I think this kind of is a subset of like the lean start movement, where like no one does those things anymore, and they still do matter. Thoughts, Catherine?
Yeah, no, I totally agree. And like, I'm usually on the receiving part of like financials, and I'm not approving this deal unless I see that, especially if we're talking to companies that had some traction, that already have users, that had some revenues, right? And it's like, if you cannot, have you not been tracking all that information? Have you calculated, what your margins are? And like, even for burn rate, I feel like just in general, the fact that founders are tracking, where the money goes and how much they spend, it shows that they're in control of their burn rate, and they're in general in control of their spending, because on early stages, again, whether you're bootstrapped or you've raised a few million, whatever it is, you can just basically fly through all that money in a blink. And then, investors will asking, where did the money go? And you'll be like, I don't know. And it's all of these small different things that will add up, and you should be tracking them. So yeah, definitely like having financials and like cap table is important, and knowing what's on there too. Because sometimes like, hey, like what's the split between founders? Like, I don't know, 50-50. Like, who is the decision maker then if it's 50-50, right? So like all of these little things that matter.
But how do you decide like 50-50, okay, 60-40, like, who's the decision maker? But if there are many people on the cap table, and what would be your like recommendations on this part? Like, how would you prefer? What is the ideal trigger for you to invest based on these criteria, for example? Like, what would be, and what is the wrong having? What's the bad sides of having something wrong in the cap?
Yeah. Well, in general, I love to see people plan. So I want to see your option pool for your future employees, because that shows me that you're actually planning on growth and you're not getting, hooked in. Because one thing that we've been talking with my ex-co-founder on our business is, I'd rather own 1% of the multi-million business than 100% of $0 business, right? So yeah, just show us that your option plan is usually like what, 15-20%. Right, and you can put in your advisors there, but in general, split between founders. Sometimes you have like what, up to three founders is a good number. I mean, when it's more than 5, it's kind of becoming weird. It's like, well, how many people do you really need for this business? But yeah, I feel like
as founders, not necessarily a company,
yeah,
right?
as founders, yeah, for sure. But I feel like it's less about the actual numbers, unless it's 50-50 and they're just like, oh my God, this is going to be a kind of marriage and divorce, and, parents are going to fight. But it's more about fairness, because I feel like that is more important, because like, who came up with the idea? Who is contributing more? Who is doing more? And there are a lot of calculators out there actually right now where you can kind of answer the questions like, who is contributing how much and doing how much. And kind of they suggest you, yeah, actually they've been around for like years now, and they work really well. They actually work really well. They give you a ballpark, and then it's a discussion between team members, but everybody have to agree. And that's a conversation that you need to have within the founders before you come and talk to us, because that also reflects how, the situation within the family is happening, and who you don't want to have undervalued founders as well.
Yeah.
Who think that they didn't get enough, and they're definitely going to fall off in a year or two when they just
very
get
scary question, like how we split our equity with owning our baby, and we are so good friends, we know each other forever, and how can we talk money? But why it's important to talk early about that?
Yeah, you have to talk about it early, because you can like imagine the situation. It's already awkward to talk about it before you've actually really built anything, right? And raised any money for it. Imagine you're having this conversation when you're kid is 5, and you're like, well, you know, who owns the head and who owns the leg? And then it's even more awkward conversation, because then everybody thinks they contributed more. So I feel like you need to clear the air before you go deeper into it and invest more time and money into it, and have clear understanding where everybody stands. And you can always revise it as you go further. You can transfer shares, somebody might quit, but having the understanding early on kind of eliminates communication, and it eliminates friction.
People often use like all this is like dating or marriage, right? So it's like when you bring on a co-founder, it's very much marriage, right? So it's like, and how you communicate is important. Not on purpose, but actually Catherine and I had a session with her former co-founder where it really felt like a marital counseling, and it felt like we were on the same page, but like her co-founder was like kept yelling at us. She wasn't actually yelling at us, but it felt like she was yelling at us. And we'd look at each other, we're like, yeah, we're good on this, right? We're like, okay. So so far, like it's the same thing, right? So yeah,
definitely. Just
partnership of any sort, right? Like you need to figure out how you communicate, what's the divide and who's doing what, right? So those are
definitely. And I feel like
all apart.
Yeah, one thing to also kind of clear, like when you go into the business, I've had this discussion every time I went into a business and partnership with someone, is like, your time, how much time can you contribute to something like this? And also like your financial situation, right? Especially when you're starting a business, chances are you're not going to pay salary to the team for a while until you raise some money. So like, how is a founder, how long can you sustain that? What is the situation? What are your debts? What are, your dues? Having that, it's also a sensitive topic. It's like when you're dating, it's also awkward to talk about it, but you also want to know what you're getting into, because what I am doing is going to affect my co-founder, and what my co-founder is doing is going to affect me, and it's going to affect the business. So I feel like starting out on a very clear page of like, okay, for now, we can always revise this, but this is what we're doing. And, based on this and this and this is how the split is going. But I feel like just the fact that founders have had this conversation also shows that they're serious about this business, and they thought through the details, and kind of, again, they're minimizing the risk of the team falling apart for stupid reasons.
So when it comes to kind of bring it back, due diligence, does that factor in? Like, should you bring that up? Should you just
I ask.
Be prepared, but maybe not disclose unless asked, or...
Yeah, I mean, they'll see it on cap table, right? And if something smells funny, they're gonna ask. Or if something within the discussion, you see some friction between founders during talking to them, again. And I feel like that's smart when investors ask. They take the pitch, they talk to the CEO, but then they're like, okay, I want to meet the team. A lot of angel investors do that. I want to meet the team.
So what does meeting the team in the Zoom era mean?
I mean, again, that's how good you read people. I guess just given that Zoom, limits your ability to read the body language. Like, I don't see what you're doing with your hands, for example, right? People can like turn off, or like, oh my God, I got stuck, and but I've been crying for 3 seconds. But yeah, I feel like it's important, again, to see the dynamics. And also a real example recently happened. I was talking to a company, and we kind of started talking with 2 founders. And one of them just kind of fell off really awkwardly from the call. And I openly asked the question to the CEO, and he had nowhere to go. He was basically in a corner. He had to comment on this. And he said, yeah, well, we're kind of having issues because the CTO thinks he needs more equity, and we're pushing backwards, and he's not happy about it. I'm like, so potentially next week you might not have a CTO.
Yeah.
And that's a big issue, right? Because the CTO, like, okay, but is he leaving with IP? Is he taking technology with him? Like, how are the assets assigned? And it's all back to, what belongs to where, what was your founder agreement, how much equity? Because if it's already vested, or part of it is already vested, you basically have a dead name on your cap table, just riding along, owning whatever % you gave them. So I feel like that is a really big issue and big question to ask and consider during the due diligence process. That's why I ask.
Well, I'll add one story from one of our companies that pitched to a VC, and they came back and asked me some due diligence questions on them, and he gave me some feedback on it. Like, the founder kind of known for being pretty narcissistic. Loved to because I mean, he loved to show off his team, right? He'd bring his team and all, and it was honestly gumming up the whole running of the company, right? Because he'd bring there's like 4 other people that had been added to the team, and he'd bring them to every investor meeting, and they were raising capital. So it was like the only thing that was getting done was them being on these meetings. And he said, "Oh yeah, he brought in his entire team, but he didn't let none of them really spoke." Right. Mm-hmm. So it's like, if you're going to bring your team on these, you should bring key team members. Like, some of them were important, right? Like, he had some people that comes from like a really good investment banking background, which was really relevant. It kind of filled in a lot of his gaps and a CTO and stuff. Like, those 2 or 3 might have been necessary, but also give them like, it just really shows like who you are as a leader, like how you manage a call. So it's like, if you get on the call and you're just like, me, I'll hear my people, right? Like, I mean, you're sending a lot of like signals that like ultimately like the investors will be reading for the intangible things, right? They'll be asking you these questions, but they'll be thinking about like not just exactly how you answered it, but I mean, I guess like not just the words, but how you answered it, right? Did you hesitate? Did you have to think about it? Are you showing signs that you're like maybe telling us a story, right? So it's like, it's really telling, like, it's like, hey, here are all the people I propped up into positions to work under me, is really what he communicated, right? So let's stay away from that, right? I mean, but if that's your leadership style, I guess it's good to know, right? And that leadership style can work, and the investor has to realize whether they want to work with a founder like that or not.
For sure, yeah. But yeah, I agree. But also like to continue on like the whole due diligence and go away from egos. I guess one thing that COVID specifically kind of revealed in my eyes is the adaptability and the lack of it for surprisingly a lot of founders, because you kind of expect founders to be able to adapt to changes in the market, right? Especially like if you're in fintech space and the regulation changed, you need to keep your ear to the ground, but also be able to pivot and adjust your business to survive super fast. And when COVID hit, there literally was a segregation between 2 types of founders. Ones that had jumped in on brainstorming with their teams and decided how to pivot, even if the pivot was temporary until we're, out of this pandemic and lockdown, but they did it to keep their business going. And there are other founders who basically just threw a white flag and, sat down on their couch, maybe cried for a little, but like didn't even try. And the saddest part is a lot of them could, and there are really good ways for them to pivot their business and adjust, but they decided that, okay, no, I'm going to put it on pause. So I feel like that's going to be something I'm going to look for going forward, is your adaptability and your ability to quickly adjust and think outside of the box, and not being afraid to pivot, not being afraid to try something new and adjust your business and grow it maybe in a direction that you did not expect it will go, but just do it.
I mean, it's just an interesting divide, right? Because we just went through this incredibly frothy, never-ending period of success and bull market, and things were going well, to like a sudden break, right? So it's just like, it's a really different mindset of like the entrepreneurs, and I think, in my opinion and experience, right, there's a lot of like really surface level in it for, I don't know, either the kind of the fame, the glory, the power, the money, right, type of entrepreneurs were really funded during that period. And I mean, I don't know. I think a lot of those, like, depending on what stage those companies are at now, I imagine a lot of those CEOs will be being replaced by their boards, right? So I think we're going to see a lot of shakeup at the ones that are already well funded, that don't have really solid leadership, and so. And I think there's, kind of reiterate my initial point. Like, I just think there's really good opportunity for hardworking companies, but at the same time, like, if you're doing something that's, and like, there's a lot of the companies that we work with are doing stuff that's like boring and unsexy, like it's still gonna be hard, right? Like, the thing to think about it is, it's still gonna be hard. It was hard during even the good times for like strong entrepreneurs, and it will still be hard during this period of time. But if you have like those natural abilities, like, you should, this should be your time. I don't know if it will be, but it should be your time.
Definitely. And I feel like also with COVID and this whole like switch to remote has been amazing and super valuable. And I absolutely love companies that are embracing it, especially if they can, right? I mean, I understand that some businesses cannot do that fully, but I feel like that if you can use it to your advantage and move your team remote, first of all, your burn rate is going to go down, right? You're not going to pay for the real estate. You can hire better people. You're no longer tied to a specific location and pool of candidates in there. You can actually go and look for people with like great skill sets and power and passion to work. And also feel like it's a natural filter, because now people who cannot manage their time, who cannot work for like on their own and need to be micromanaged, you don't want those people on your team to begin with. But now, you know, you can't hide anywhere. It's all right out here thanks to remote mode of work. And I feel like you should embrace that and use it as a tool to build stronger teams. And I feel like, again, to sum it all up, we can talk about, you know, margins, we can talk about how your cap table looks, but in the end of it, we keep coming back to team and people. And it's like how balanced the team is everybody heard, how well they're going to continue working. The happier team is going to be more involved and passionate with the business, and though the business is going to continue growing. So
write out the tough times, right?
Yeah. So like through COVID, through whatever it is, remote, not remote, I feel like we're all coming back to the same thing. Is like people. The main asset a business and a startup has is people. So going back to that and building stronger teams and fair teams.
So what would be your recommendation for communicating that? Like, these are very intangible things, right? So how does a company put this out, right? Like either in a pitch deck, presentation, due diligence, right? Like where does this fit and how do you communicate it?
I mean, one of the things is like the culture, right, in the team. And you, again, when you're talking, right, back to the conversations with founders, you can really see it most of the time, how the things are going and what's happening and who is where and who is undervalued. But I feel like also having a diverse team, like diversity within your team, is a good indicator of that. And I personally see it as a advantage and a competitive advantage, because if you take people at this amazingly crazy world of, you know, segregation based on whatever colors and whatever you love and don't love and what you believe and don't believe in, I feel like if you can bring people from different cultural backgrounds, from different you know, belief systems, and enable them to work together and move in the same direction, that creates such a solid base for the business that even if you have to pivot, even if you have to stop and restart again, you're going to be able to do it. And I feel like when I see diverse teams, and I mean diverse not just by race or gender, I also mean, you know, age. If you can just go away from the differences that media is telling us to focus on, and focus on skill sets and what people deliver and who they are as a human being and how they work, right, and build a team off of that, I feel like that sets you up for success as a company.
Throw in there, like, I think that's like worked on teams that are like interestingly diverse in cities that aren't, that have very small diversity, but make sure that the culture isn't about like that you all agree on whatever the mission and the product, right? Because I worked for a company where it was like, you know, it felt like half the day was talking about debating on different personal, like, political issues, right? So it's like, make sure that like that you know, I think it's very important to have people that have different backgrounds and different views on the world, because it's going to just help you relate to your customer better in a broader audience, and hopefully build a better, you know, culture. But just make sure that like that's not that you're not just having internal debates and you guys like fundamentally don't like see eye to eye on core issues, right? Kind of going back to that kind of marriage thing. It's like, can we all get along and work together in the same direction, right?
Yeah, because you won't be able to, you know, break up and then, you know, visit your startup on weekends or something like that.
I've never heard of startup custody.
Right? I mean, if we're talking about marriage and kids at that point. Yeah. And I feel like the last, before we probably should switch to Q&A, an interesting conversation and discussion we had with Brett recently is about exit strategy, right? Because there is a separation between investors. It's like, do you want to see it on the deck, especially for early stage companies, or don't you want to see it because, you're just going to be like one trick pony, or are you just going to flip it super fast and now you're in it for the money? Like, duh, we're all in it for the money, okay? We're investing in you only if you're going to make us money. That's the point of business. Otherwise, go into nonprofit space. But I feel like the COVID also showed us that something that we stopped really thinking about is liquidity, right? And I'm not telling you that you have to sell your business in 5 years or 10 years, right? You can go IPO, but I feel like in general, having an understanding of your options. If something suddenly changes and you cannot continue doing business on personal, internal, or external, level, if COVID hits next time, and a lot of corporates were buying out companies that are on the urge of dying, right? But like having those strategies and thinking through your options, I feel like is a plus. You might not want to always put it on your deck, obviously, but I feel like being able to communicate that you've thought about it, I think it's a value, and maybe some investors will disagree, but again, I feel like we forgot about exit, and that's so we're in it for the exits. So
yeah, I think it's a massively important thing, like, especially as you're pitching VCs, right? Like, I think there's a piece that people always kind of forget to talk about. It's like how, like, implicitly or explicitly, like, how are they going to make money as a piece? Like, because it's always like, oh, here's the product here. Like, they go through the thing and they really like forget to connect the dots on, like, a VC's investing in you so that they can get a 3 to, depending on who you're talking to, 100x return on their investment within a certain time period, right? And it's important to understand like what their expectations are and if you fit into that. And right, another piece of this is, right, like, as you guys are going through due diligence, you should also be due diligencing people that you're investing in, that are investing in you, because maybe you don't want to work with them. I understand that, like, as a startup, like, you're like desperate, or maybe not desperate, like, you really need the money to do your thing and you're willing to take the money from whomever will give it to you. But like, really think about like the other piece of, like, you're also building a relationship with them. You're going to be working with them for 1 to 10 years, who knows? And if they're terrible to work with and they have unrealistic expectations of how your company's going to grow and scale and exit, then you really need to figure that out early, right? That's going to make the relationship on both sides better, right? And I think almost no one communicates that in their deck of, like, I mean, I guess it could be under the exit piece, or just in general, like, here are expectations of how we're going to take your investment. Like, it's always about how we're going to spend your money. It's never about how I'm going to make you money. Like, I feel like that's a slide that's missing in every single deck and in every single conversation.
Agree.
Like a couple like takeaways, like, maybe talk about like your team dynamics, talk about your exit plan, have your due diligence, like the basic due diligence stuff and your financials ready in advance. And those are the type of things that are going to put you at the top of the stack. I think the other piece, like with all the Zoom, one last thing is that, like, getting an introduction in, and like building that, like building rapport and building trust is more challenging in this scenario, but it still can be done. Like, I've always, for most of my career, I've done stuff remote and worked with teams and different investors globally. So I personally have no issue with not meeting a person. Like, we've worked with companies where we didn't meet the founders in person until like 3 years later when they came to the Valley. But other investors aren't going to be that way. So you have to really think about, how do you build trust and how do you build that relationship in a digital world?
Sure.
Yeah, so
we have some questions.
You already did your key takeaway. Just one more question about if you would summarize specifically for due diligence process and post-COVID due diligence process, considering our international audience from different countries who are planning to get to the States, or maybe some of them already started something in the States. So what is not working anymore with new due diligence right now, and what is new that is working much better, or never worked before, but now it's good to work? Just a summary out of all this conversation. So if you could do both.
I'll leave that one to Catherine.
Thanks. Just throw me under the bus. So to kind of summarize it, right? Show us. Okay, let me restart that. Think outside of the box, right? Again, we're still like due diligence process as well as the venture capital model. We're moving slowly. We're adjusting very slowly. We really need to be disrupted. But we think we're the shits. So we're the kings, but we're not, but whatever. So think about the ways that you can pitch your company and tell a story, right? Get us involved, get us interested. And when you're pitching, focus on, as Brett said, how you're going to make money with this. Because I feel like one of the biggest issues when for initial due diligence, I don't want to see four slides of how your product looks. We're not that deep in this relationship. Like, I don't want to know what, you know, color you prefer or what buttons you like to put there. What I want to see is, how is this a valid business that has, you know, market product fit, that has interest from potential or existing, hopefully, users? How is it going to make money? And are you the key team that's going to survive and make it happen? And that stays, right? But the ways you can show it, I feel like, is changing. And we're going back to, like, be open with your financials. We understand that, especially in early stages, you know, the numbers are not going to be that pretty, but at least we see through the bullshit. We see so many decks and so many pitches that, you know, you can lie as much as you want, but that's just going to, like, dilute any trust we've had so far. And we're just going to dismiss you just because we don't trust. Like, if you're lied here, where else did you lie, right? And I'm not going to spend 3 hours just trying to validate one of your decks, right? So don't be afraid of your financials, whether high or low margins. Just be fair about it, be straightforward about it, and track it, just even for internal purposes, right? Show us economies of scale and, like, how you're going to grow, especially if you're expanding to the US. One thing that actually recently came up with a conversation with a founder is, pay attention to your legal structures, because what you think the market is and what it's actually going to turn out is probably going to be very different. So pay attention to your legal structure, how you're going to enter the market. Is there going to be a parent company, or, you know, a whole new business? Like, all of these things you need to think about it
throw one
before.
thing in there, yeah. A lot of times, like, people will set up a Delaware C. It's for the investors. It's a question of, am I investing in only the U.S. entity, or am I investing in the whole company?
Exactly. And how does that work, right, in terms of ownership and equity and cap tables and all of that stuff, and profit sharing?
Also, keep in mind, most U.S. or investors will want you to have a U.S. legal entity. I don't know what the services are added from Danielle, but I know that, like, Stripe, there's a lot of different, you know, very inexpensive ways to get set up with a legal structure. So yeah, contact someone on that to get that set up.
Mm-hmm.
So.
Yeah. And then again, when you're pitching, is show us more differentiation, not just, you know, the pie, like the charts that we're always seeing, like, oh, we're in this right corner, like, better, faster, you know, cheaper than everybody else. You know, I feel like that's changing, because there's recently an article that I read of one of the investors who said, when I see that, I always like to ask founders, what would your competitors say when they see this and they see where you position them? And it's not a question to, like, aha, gotcha. It's more of a reality check, right? Because, like, obviously you want to be in that, and we expect you to be in that, but did you really, you know, do you really understand the market and what's happening and what your competitors are doing around it? And then also back to, I feel like what is going to change thanks to COVID is, we're going to look deeper on your adaptability and your team, and, like, how you're structuring, what are your costs, could have you gone remote, and who are you hiring? And I feel like diversity is a question that keeps popping up, and a topic that keeps popping up, and you should not be afraid to, you know, I understand that being remote or being diverse comes with its own challenges, especially, like, with big age difference between team members, because everybody has different mode of work, and, you know, the way we look at things is different, and hence the reality we live in, and, you know, all of these, you know, arguments and that we're having. We need more younger people, right? But we also need to understand we're all living in this planet at the same time. So if you figured out how to work all together despite all the differences, I already want to work with you, because maybe this company will fail, but I will bet on you again, because maybe next one will fly, right? Because I'm going to bet on you as a team.
Expand on one thing you said earlier. I think it's really important for this audience. It's important to tell the story of, like, why your, like, impressive traction in your market is going to transfer to the U.S. market. Catherine has sent me some stuff from Russian market where, like, they've done incredibly, like, they have great, like, they have great experience, great stuff, and it's like, and then when they demonstrate that also translates to the U.S. market, like, it's really impressive, because they already have more impressive traction than most startups you're going to see, right? They're already like established businesses, and now they're expanding into the U.S. market. If it makes sense and you can tell the story in a way that makes sense, like that you're going to really set yourself apart. I think you come in a little bit of a disadvantage. I know from living and working in Silicon Valley, there's this, especially Silicon Valley, right? There's this bias that's like, I don't know, it's just like you're not a Silicon Valley company, right? So you kind of start at a disadvantage. But if you can tell a really good story of why, like, this is going to expand, like, you really understand the U.S. market, I think is a big piece of it, of understanding like the cultural differences, right? Like, I can always make the joke that I've seen a lot of Australian companies, and sorry if there's Australians on this call, but it's like they always come to me and they say, we've nailed the Australian market. And I go, that's neat. There's 20 million people, right? There's 40 million people in California. And there's also 40 million kangaroos. So if you tell me that you've nailed the kangaroo market, then I'm interested, right? So it's like, sometimes, like, you know, especially these smaller companies like the Norwegian, like the Scandinavian countries, like you could be the market leader in that, and it's still not even a drop in the bucket compared to, especially California and like the U.S. market. So you have to tell a really compelling story why this is going to transfer, and like why you're going to win in this market.
Yeah, you got a point. Like, guys, thanks for the summary. I really appreciate that. So the conversation is amazing, and I think it's so a hot topic right now, and your opinion really matters, especially for our community. I can say from my end, my standpoint, that what I think is also important nowadays is this old-fashioned word passion, because what I see in my community, people, my team here is like 15 people already, and our community is just 3 months, and they all care about helping businesses to go global. So I think this kind of spark in their eyes is so important, and they're ready to work even nights for free. And it's not about the money, but the impact they're making. And this is amazing. I'm inspired with that, and I think this is what every startup should have. Like, what do you think? Thoughts of that?
Totally agree. And I feel like the companies that push through this kind of lockdown and keep pushing through COVID, regardless of what's happening, you know, to their business, whether they had to stagnate, it had to stop, and they can't pay money, they couldn't fundraise. I feel like the companies that stuck together and continue pushing, that shows the passion, that shows the trust in the founders, that shows founders' trust to the team. And that's the strongest, again, back to, you know, the strength of your team and the base and the heart of your business. That's the team, that's your people. And if it basically illuminates passion, you know they're going to figure it out. Maybe it will take extra month. Maybe it'll take half a year. Maybe it'll take a few years, but they will persevere and figure it out. And, you know, back to adaptability and strength and not being afraid to fail.
Yeah, thanks. And I totally agree with you in terms of remote work. This is I'm all about this for, like, I don't know, since I just came to Silicon Valley. I love remote work, and I was thinking, like, why the world doesn't want to change, and now the world has been pushed to change that. It really makes sense. And also
sure.
the point about the culture, the different cultures on the team, different like people with different skills. It doesn't matter who they are, where they're from. This is important. In our team, I'm just making some comparison what you guys saying, and are people from different countries with different beliefs, with different age, and even level of understanding the industry, but they are all like trying to contribute. It's very interesting. So let's switch to Q&A session. I'm really excited to ask some questions. We have a few questions. One question I got from Christina. She says, good afternoon, thanks for the webinar. I have a question. Do you invest in edutech projects at an early stage?
We focus on seed and Series A, and we don't specifically invest in edtech companies, but one of the focuses, one of the focuses that we do have within the, especially personal finance bucket, is education about financial education. Because that's a big gap. And like, how do you explain not just how to trade, not how just crypto works, but also the basics. And some of the interesting projects that we see are actually around kids and teenagers, and, you know, how can we help parents teach financial responsibility to kids and like the real value of a dollar, because unfortunately the school systems don't have it, but we see it as a big part of the problem and therefore the solution. So if you're working on edtech, if you have an edtech company and financial education is a big part of it, then we would look at it.
Yeah, I know I sent Christina a private note asking her for more information. So I mean, not specifically investing in the edtech space. I've worked with a company in that space, and I know how hard it is and kind of how unprofitable it is. So, I mean, at a high level, we're not directly investing in edtech companies, but as Catherine was saying, if it has application in personal finance and in financial literacy, then yes, then we'd be interested. And yeah, and we know, I don't know, but from my personal experience, I know how hard it is to really get those companies off the ground. There's another company it's really early, we like, but I like it's whenever you do something that's like good for people, it's a much harder sell than something that's, I don't know,
Enterprise.
Yeah.
Yeah, I don't know, but not virality, right? Like the Instagrams and the Facebooks and the consumer, the stuff that's fun and like candy-like, it's a lot easier to get people excited about. Like, hey, here's an education product. Oh, I gotta learn. So, or maybe it solves a problem within universities, and then the challenge becomes it's like a really hard sales cycle. So it's a hard space, but.
Christina is adding, I'm developing a mobile application with a personal language tutor with augmented reality.
So it's like a language based, right? If I'm understanding correctly.
Augmented reality, I mean, I don't know.
No, augmented reality, but yeah, like language tutor, like that's outside our focus because it doesn't tie to economy.
I don't know.
Yeah.
I mean, Christina needs to.
I like the AR training part of it, though. That's interesting.
Yeah, that's interesting.
Yeah. So just imagine this: startups in Russia, in CIS, I mean, in other countries as well. But let's talk about probably this region. There are many like talented teams generating good revenues in this region. And they are really like killing it here, but they are not in the US. They're giving up a lot of equity for like to local VCs, which is, I mean, the reality here, and they're not able to raise as much capital as in the States. So logically, they need to go to the States and raise there because they get more capital for for less equity, and but they don't have traction. They don't have a problem to incorporate in Delaware and probably move their IP in there. But what would be your advice on like doing this stuff? Because this is like a challenge, like a wall for majority of the startups, and these good startups,
Do you have comments or?
I was just going to say, Catherine would definitely know more about this than I would, both
I
culturally and experientially. So.
Yeah, I actually just had a conversation. I've been interviewing companies that failed and died, and I recently had a conversation with a company that originally started in Israel, and they did really good there. They basically took over a majority of the market in terms of they were doing automated conversations for financial technology. For financial companies, like banks and like insurance companies and stuff like that. But then he was laughing. He was like, well, yeah, it's like 8 million people. So like what is half the market, right? Like on a scale. So they decided to expand and they came to the US, to New York as a, financial kind of hub. And got a lot of interest from investors as well as, potential customers because they were building, conversation application before it was kind of cool and hot. That was like a few years back, right, when it just started popping up. But they ran into an issue that basically was one of the main reasons why they had to close the company is they could not convert their Israeli company into the US company. They already had outside investors, a few angels in that company, but the market is different, as you mentioned, Daniel. Their valuation are very different in their market versus the valuation they would have gotten here at the same stage, right? And then the amount of equity they had to give up to those investors is very drastically different based on, the US market. And that was a huge issue because they couldn't convert. They couldn't really restart because, what do you do with your existing shareholders? You can't just drop them and say, hey, hasta la vista, bye. So you can't really do that. You have to find a middle ground for everybody. And they ended up not knowing what to do and had to close the company because there was no way out. So I know a lot of investors would say, well, you should have planned for it, which you probably kind of should have, when you think about your business. And, that's why I am still a supporter of business plans. Like, I don't want you to write 50,000 pages on it, but it helps you think through, like, okay, where do you want to go? Because once you're starting a business, whether it's in Russia, Ukraine, or any other country, it's more like, okay, so what's my ceiling here, right? And where do I want to go next potentially? I get it. It's the question for later on, but thinking through it is something that must be done, but usually is overlooked by founders. And then again, once you get here, talk to lawyers. I know that some countries and some entities with those countries are actually have ways to basically just convert. It's probably going to cost you a pretty penny with like all of the legal and help that you'll have to get, but you should be able to convert. But potentially, can you separate those two businesses? I would honestly go for that. And I just became an advisor to a company from Russia, and they have a successful business there. But then they decided to come here with a slightly different, same industry, but slightly different product that was tailored for the US market. So they created a separate entity. It's a separate entity. It's a separate brand. And then eventually, you can, once you're growing into an actual corporation, again, you have more money to spend on legal and you can build up the system. But
part of this is like, is it an expansion or is it a separate company?
True.
Right? Like for some company, like if you really I think if you're really expanding, then it's like a US subsidiary and it's like a different conversation. But like to some extent, like when you start your company in the US, there might be enough nuances and differences and, like cap table or founder issues that it's really a totally separate entity, totally different business. And that starting in a clean slate might make the most sense. So going to set you up for the most success. So it's really going to be dependent, but
yeah,
especially if you need to raise a lot more money and you will kind of basically restart as a startup. If you are able to, I would try your best to go for a new entity.
But if we consider the situation that they already incorporated IP in there, the main headquarters is in Delaware. So maybe headquarters in California, operating from California, like majority of startups, right? Do you think the algorithm of steps is the right one, or you can add something else into it? Like, for example, they has incorporated, they already have business like in Russia, Ukraine, wherever. And first, they know that their model works in their market. They're making money out of it. So they have first hypothesis that it might work in the States, but they know it's a different market, right? So they need to validate this hypothesis. So they go and validate and test it and collect this first information for their potential target audience. And their target audience says, no, this is absolutely different. We need like this, but the other way around. And then we work with you. So, or it's not that target audience, is the other one. So, and then they understand their niche market. So this is validated. Now they probably get some, if you talk about B2B, they get some initial LOIs, probably not sales. Is it the right algorithm of steps, or would you add something for startups?
Honestly, I wouldn't incorporate yet before you validate. I would validate the market first, because maybe you'll find out that this is absolutely not your target market. I would not recommend spending money on that and getting on the hook with like the minimum tax payments and all of that fun stuff. Yeah, you don't really need the company or legal entity to validate your idea or to validate whether your existing business is gonna, be a good fit for the market. And again, taking the validation first, and maybe you'll figure out that there is place in the market, but you need to pivot your product. And then again, you have more options, because now you have a question of, oh, maybe it's a whole separate business that I'm building as now a serial entrepreneur, right? And that's a totally fine thing. So I would start with validating the market and understanding whether you really do want to proceed this route, and then this is how we're going to do it, and these are the things to be able to sign up, like the intent agreements. Then yes, you will need a legal entity for that one. But it's pretty, yeah, especially I feel like in the States, like Brett, feel free to correct me, it's pretty okay because people get it, especially in California. It's like, okay, everybody's a startup, like we get it. Bootstraps,
It's like California, San Francisco Bay Area.
Yeah, like it's like we get it. So, and everybody understands it when they're talking to founders and startups that, we don't expect you to have everything in, prepped when you're going and validating your market or talking to potential customers. So yeah, I would not spend money on incorporating before you validate.
All right. So for the participants, just this is the beauty of a Go Global community where we help each other and connect with people from United States, from Silicon Valley. What happened right now in here, Christina was asking a question to Brett, and she managed to get attention to Brett, and she will have a conversation with him later. She got his contacts. So this is how it works, how network, when you dare to ask. It doesn't mean that you have to spam people, but a person got connected with a VC from the United States. This is the power of network. Thank you, Brett, for actually taking your time to speaking with us.
Of course, yeah.
Appreciate that.
Yeah, I want to learn more about this AR she's working on.
Interesting.
I don't think it's a fit for us, but I'm happy to talk to her.
I mean, it might be a fit for somebody in our network, so we're happy to. Yeah, we exchange deals among groups and funds, so it's totally fine if we're ready to vouch for you. And there's another question from Slava. Like, what do you think? Yeah, sure. Like, what are the most important personal qualities for a leader, founder of a startup? It's a great question. And I think we covered some of it, right? And again, adaptability, resilience. How do you withstand failure? How fast do you kind of come back from any pushbacks? And you have to have really thick skin. I feel like that's one thing that is very important for every founder. You're gonna get so many no's, and so many people will gonna say this is a stupid idea, but it's not, because you're just talking to the wrong people. But just being able to not get super discouraged by all the no's and all the negative feedback, and also being able to accept feedback and criticism and kind of put it through and think through it and be able to filter out, dismiss what's not valid, what's valid, and it's totally like up to you. But don't get super defensive when people ask you tricky questions or kind of play devil's advocate. Like,
one thing to think about, like when you're talking to VCs, pardon me to cut you off there, is that what they say and what they mean might not necessarily be the same thing, right? It's like a lot of times I've been on calls. I was on a call with actually a YC grad, like one of our companies we're currently syndicating. He's the third time entrepreneur, and run a call with the Draper associates, one of their associates there. And we get through the call, and like his perception of how that call went and how mine went, like I thought it was like a good call, but it was obvious that like the VC was not that into him and was not going to follow up. But he was like, "Oh, that went great. They loved it." And I was like, "I don't think you're really,
reading
here." Yes. I mean, there's always, generally like people don't. Well, it depends on the personality. Most of the people you speak to aren't going to say, they're not going to give you the feedback you really need to adapt and grow. Like, you're going to have to kind of read through the lines of what they mean versus what they say. It's like, you'll get a lot of stuff like, "Oh, hey, love it, but come back to us with more traction," or something, right? It's just kind of like, we don't really love it.
We're not ready.
It's one of these things where, and if you're lucky, you'll get like somebody that'll give you some really harsh feedback that you don't like, and then take that, because that person at least was honest with you. So I think it's like, as an entrepreneur, it's really hard to sort through what's real and what's not.
And again, like, it's not personal when we tell you like, I don't believe in this part, or I don't think it happened. Again, it's just my opinion based on whatever experience and knowledge I have. And then it's not personal. It doesn't mean that you're stupid or you're doing something super wrong. It's just literally me trying to give you feedback so you can validate it in your head or with your team, and then adjust or just disregard it. And I'm happy to be wrong. And please prove me wrong, but
I think there's certain traits that like are the definitive, like, perseverance, and there's certain things that make like a good start, like especially at the earliest stage, right? There's a certain person like that's needed to get a venture off the ground, and there's sometimes like a founder can scale and like go up to be a Steve Jobs or like a Benioff or whatever, but those people are really rare. Like like there's certain personality traits, but if you're an entrepreneur that in your, what I'd say, like, to kind of answer part of this question is, like, you shouldn't change yourself to be who like an investor wants you to be, right? Like who, like when I, work for different VCs, right? Generally speaking, people are they want to work with someone that they like them, I think, whether they consciously or unconsciously say that. Like the type of like person that Jason Calacanis likes is not the type of person I want to work with, right? They might be a great entrepreneur, but they might also fail. Like I just like I think it's really like about finding like the type of VC, angel investor, whomever firm that like gets you, like believes in you, right? Versus you trying to turn yourself into what you think is like the archetype of an entrepreneur, right?
Yeah.
Like
And then
trying
also,
to be somebody else is not going to work well for you or the VC.
definitely. And also in terms of like being a good leader is respect your team, respect your co-founders and team, because they're the biggest asset and they're the biggest and earliest believers in you because they're building it with you. So, and you see sometimes, especially after a few rounds of funding, some founders turn into, sorry, not politically correct, but assholes. And I always open up with like, this is a no asshole policy, like we don't work with people like that. Nobody likes you. So like, go find print money somewhere else. And also, if I see that you're a micromanager, oh Jesus Christ, we're over. Like this is not scalable, right? And you're gonna work yourself into the ground and you're gonna burn out. So respect your team, but also trust it. Trust your team members to execute on the vision together with you and move the company forward. If you cannot trust people like that on your team, then you have the wrong team. So I like people who see that, identify it. Like I was an entrepreneur.
Fill in their gaps, right?
Yeah. And I remember one of the companies that I joined, like post funding, and I wasn't a co-founder, and I run like operations and strategy. So I came in and like literally one of the first things that I did, and I fired half the team. And like, that's a shitty thing to say because people always think like I'm some sort of terrible person. And I honestly am not. And one of those people was one of the co-founders. But if you're not pulling your weight, if you do not have the skill set, and if you're not showing passion, and I have to just basically micromanage and ask you every day, have you done this? Have you done this? Like, this is not going to work. This is not going to move the company forward. You are the anchor. You are holding everybody back. Just do a favor to your own team and let go. And like also as a founder, be wary of those people. Like hire slow, fire fast. Like once you see that, be a good leader and save your team and just like, hey.
Well, I think the reality of like when you're first putting together your team is like, especially if you're bootstrapped and just like, you don't really have the resources you need, and you're kind of like you're playing a game of pickup ball, and you take whomever and you have to train them up. But as your company scales and has success and you raise capital, you just have to be aware that and have the ability to maybe either do it yourself or hire Catherine to come in and fire half your team, right? So, I mean, the company will go through different stages. So there's people that are, I mean, I know like one of my advisors is like this amazing CTO. Like he loves the friends and family up to like Series A stage, and he loves all the pain, and he's this amazing like outlier person. But like once a company becomes successful, like he gets really bored and doesn't want to be there, and like he's just not a great CTO, right? So it's like I don't know. Like there's just, I guess my point is there's different people at different stages, right? And like sometimes as a founder, you have to realize that you might not be a person that can scale with the company. Like I know for myself, right? I couldn't like really, I couldn't run Uber, right? Like there's so many of these companies out there that I know that I'm good at my little circle. I think I could do more than I'm doing now with some more money. But in general, like I kind of like know my limitations, and I think that's a really important thing to understand, like where your gaps are as a leader.
True. And that's like back to like the recurring kind of question that's been in discussion for years now, right? Is when VCs, when companies scale to like post Series B, and then, oh my God, investors came in and took over the company and fired the CEO. Well, most of the time, if you chose your investors, like, strategically, and they're smart people, there is a really good reason why they're doing it. It's probably because you are not in a, have the skill set or experience to take this further, but you're in a momentum, so you don't have time to learn. And that's why one of the things that good leaders do is they spend at least 30% of their time educating themselves, growing their skills, right? So, but also, like, if that happens to you as a founder at later stages, again, try to stay on the team if that's what you want to do, but also understand that, again, there are stages where you fit and you don't fit. And, majority of the time, like, you're just not on par with where the company has to go. And that's not personal. Again,
yeah.
It's not personal.
Well, I think that's like I think, I don't know if you can communicate this early, like, it's a good sign that if you ultimately believe in something that can outgrow you, right, and you're willing to step away at some point because you're holding, like, that's a great entrepreneur, like, and hopefully you get compensated, and like it's not like a nasty. I think the stories that become most known are the ones where a founder doesn't want to leave. It's time for them to leave. They're now a bottleneck to the company they started, and they think that they should be there just because they started it. It's like, I think every day you have to earn your right to be on the team, right? And so,
like everybody else.
Yeah. And if you're the, someone needs to cut you, right? And it's like, if you're at the top, it's probably going to be your investors and your board of directors, because no one else can fire you. So, but I mean, that's the risk you take when you take on capital, right? So.
Let's take a few minutes. I have two more questions, guys. If you have any questions, please ask. If not, we let Brett and Catherine go. Also, you can raise your hand and ask your question with your voice. So I'll let you speak. So I have two questions, and you guys can take it separately or like comment on both questions. First, I noticed that in Russia, CIS region, people don't really understand the differences between different funding stages. So can you comment what means like pre-seed, what is pre-seed, what is seed, what is round A, and further, what is a bridge as well? Like, it's very interesting. And
yeah, that's
and
a lot of bridges out there these days.
No, yeah. And the second question is why building reputation and a network is important for a startup when they start. Like, how it can help with sales, how it can help with fundraising, and so on. And why it's very important not to lose reputation. I hope I didn't ask too many questions.
I think there's two main questions. Is there a part of that you want to answer, Catherine? Happy to answer either or both, neither.
I mean, just to like very simplify the stages, pre-seed is when you're just working with an idea, and majority of investors are not going to touch that. That's the 3F. Yeah, for like friends, family, and fools. Yeah.
That's when you should be raising money from either self-funding or your mom and dad, uncles, any of your buddies that still currently like you, but won't like you in 6 months.
Yeah. And then basically for the rest of it, your seed until your growth. So Series A is considered more like growth when you have the product, you found your product market fit, you have paying users, but now you need to scale and start growing and actually becoming a business, right? And then it goes higher and higher and higher. And then, there's a mezzanine round where you're basically preparing for IPO. And bridge rounds is basically when, you're stuck in seed and you're not ready for Series A. So you need to continue raising. And like sometimes there are bridge rounds between Series A and Series B. It's more of like you have liquidity gap that you need to close before you qualify or want to take a next step. Because like every round that you take, right, your valuation changes, you're getting diluted as a founder. So like keeping that in mind and how you can manage and use these different stages and bridges to kind of, manage it.
So I'll kind of add on how I think about those different stages. So starting with the friends and family, like I said, that's kind of your internal, network. The next one is like pre-seed, is where I think if you're getting your first institutional capital, probably most likely, depending on where you are, is either raising that, and it's a pretty small chunk of money. Let's say it's anywhere from maybe as small as like 25K to 150K, maybe a little bit higher. Generally, you're getting that from an angel investment group, or you're getting it from an accelerator, and you're just basically showing that you can get like some sort of outside validation that you're getting your first institutional capital, meaning first money that's coming from professional investors, and then you're just showing that your ability to traction and that your team works and you can kind of hold it together and raise. The next stage is seed. This is the area that we're primarily focused on now. It's companies that are coming out of these accelerators are kind of potentially coming out of different angel investment groups. Those rounds usually are ranging anywhere from probably 500K to 3 million, depending on the traction and the stuff. And these numbers really vary depending on what you're doing and what region you are in. So that kind of take that with a grain of salt. But the like seed to Series A is like when you really start to scale up your team and you start to actually have these sales revenue, right? Like in that area, that may either happen at the seed stage or the Series A, and above that, like that's when the really kind of the bigger VCs come in with the larger checks, and you're usually raising 5 million, 10 million, maybe even larger. And at that point, like it's just really about scaling out probably your engineering team, product and sales, and probably it's sales. Like the further up you go, the more it's about sales. That's my view of what those things mean.
Yep. And what was the second question?
The second question was about the power of network and building reputation early stage, so it can help, and why it's important for your business when you start, and how it can help you with sales and fundraising.
Definitely. So in general, like back to our previous discussion on like influencers, right? Like I do like personalities, and to be honest, it also ties into the trust. It's not just the trust between you as a founder and investors. There's also the trust between you and your users or customers, right? And usually that is much stronger when the trust is built, the team, and there's this kind of human part to it. This is just a logo that I love, or a brand that I go to that usually works with like physical products, but not technology. So like, how can you drive your company and sales? Speaking at events, like it's not just PR, it's not just something, oh my God, I have to do it because everybody's doing it. No, that sets you apart, that makes you a thought leader, that builds trust from like the network around, right? It's like, do we trust what he's doing, what he's saying, what he's selling? Because basically when you're a founder, you're building two products at the same time. You're building your product or service that you're selling to your customers. And then second one is you're building your company, which you're selling to investors. And you need to be aware of that. So, and building your network is important because again, you cannot do it alone. And it's not just your team, it's also people who, you do partnerships with, who allow you on early stages to tap into their pool of potential, customers or existing customers or network. And it also ties into referral, because we as investors, we have groups and chats and whatnot, right? Networks, and we refer companies to each other. We co-invest with each other. And when a company comes from somebody we know and trust, we are more open and willing to look at you and maybe even give you a second chance when, we'll dismiss you, but like, okay, they validated, they vouched for them. Let's at least take a call and talk to them. So that's why it's important, because it gets you more doors open for you. So building those relationships is important.
I think, to add on to that, I think it's important to always, like, as I kind of reflect on working with like 45 early stage companies, that some were successful and many weren't, right? And largely, comes down to like network. And we tried to kind of fill that gap for those companies. I think like when I look back at like a lot of these startups and my own experience of trying to raise a fund, it's like, if you don't, you should always have relationships that are one stage ahead of you. You should be building the relationships, right? If your friends and family talk to, like, you can probably have a series of conversations with their accelerators, angel investors, all this stuff, knowing damn well that they're going to turn you down, right? Like they're going to say you're too early, right? But like getting to that, like figuring out what it takes to get to that. And so when you come to them and you say, hey, I have this traction, right? Then they have to like either deliver on their promise or not, right? But in general, like you should be thinking about what's the next stage of building the network for that, because hey, like when you start these relationships cold, like that's exactly what you do, right? I see all these companies that are coming to us and they say, hey, we want to close our round, like by the end of this month, and it's like, I don't.
Good luck
That's not
with
going to
that.
happen, right? Like we'll call with like the Draper one. It was like he's like, well, we're looking to close this call next week, and they're like, we're not going to move that quickly, right? So I just met you. We haven't done due diligence on you.
Don't put me on the due
Like we have a
date.
partner
Yeah.
meeting next week. Like it's gonna all this stuff is gonna take longer than you expect. And it's like in general, like I've been telling, like as we build out our network, I'm telling my associates, I said this is all relationship based, right? Like so we have to get on calls, we have to build relationships with all of these different angels and stuff, so that they trust us. So when we send them deals, right, like we already have this warm relationship. So it's very relationship building. It's honestly, guys, it takes a lot of time. The hacks are working with somebody that's finding a partnership or working with an accelerator that already has those deals, or a VC that'll introduce you to other ones, right? Like those are the hacks to that. But it's like you have to build at least one solid relationship that has good distribution, and will vouch for you, right? And
I
I mean,
also
your brand is everything, right? So I mean, I think about like had this conversation with one of our associates the other day. He said, "Oh, you're not going to show me, send me on a introduction meetings with angels, like without training me, are you?" I think that was kind of the gist of what he was saying. I said, absolutely not. This is my brand, right? We've been working on this. The last thing I want you to do is get on a call and fumble our message and say something that's not true or make us look like idiots, right? It's like our brand is all we've got. So it's the same thing for you as a startup. And like you're starting with nothing, right? So it's like you have to build it. It's hard. It takes a lot of work, right? And the thing about that sucks for all the entrepreneurs, right? It's not your core business, right? But it's part of the process.
Yeah, and I also feel like having network around, even just having other founders around you from other industries or same industries, is for your own sanity, because we all need help. And like building those relationships to be able to ask a question like, hey guys, I've ran into this issue. Why are they building all of these like peer-to-peer learning and kind of roundtables? You need to build that around you. Like, please don't pay for it, but like build that around you. Quality people that you can talk to, that you can, whether it's business related or personal, you need people who understand what you're going through in order to stay sane and be able to even like on therapeutic level, just like talk to someone.
I think the entrepreneurial journey can be a really lonely one. I think this is why like there's a high suicide rate. Not to get too grim on all this, but it's just like people live in isolation. You spend all of your time, energy, and resources building these companies. Your identity. I mean, I've been through this with Unbank, right? As when things don't work out, like like you probably also have family issues that it trickles into, right? So it's like it's important to have a really good support network and be talking to other founders and working with people like just like especially it helps if they're non-competitive, like because everyone wants to put on this front that everything's going, especially my experience in the Bay, it's like you always want to come out and say everything's, we're crushing it, we're killing it, everything's great, it's amazing. Oh yeah, you're always like spinning some sort of BS metric saying, oh yeah, like we're doing amazing, right? And you're probably doing okay at best, right? And so but it's like it's good to think to have a life outside of doing a startup if that's possible, and have like a support network that or other entrepreneurs that you're not competing against, that you could like share these like war stories with, because and the reality is like at some point this stops being fun. Like you start it because you like love what you're doing, and at some point it becomes this really shitty job, right? So try to find ways to like still enjoy your life, right?
So we have a last question from Vitaly Zubarev, and I think this is an awesome question for closing. So let's answer this question and just give a few words for closing this session. And once you guys close, I encourage everyone to stay. I will have a few more words to say about the upcoming things. And so Vitaly Zavialov is asking, what makes startups successful? What would be your key recommendation?
If we knew the answer to this question, we would have been billionaires, and there wouldn't be such a high death rate among startups. But I think it comes to a few key things: is that they're entrepreneurs themselves, right? Is this the team that's going to make it happen, and are they the visionaries and doers at the same time? Second is your network and your access to things, because you could be amazing and you can be building an amazing thing, but if you cannot communicate it, if you don't have anybody around to help you lift you up, it's probably going to be super tough or pretty much impossible. So did you build a trust with the market, with investors, and with everybody else? Timing. right? And those are the things we talk about all the time, but that's very important. Timing, and do you understand your market? Like we see this really often with like crypto projects right now, when they come out and they're like, oh my God, we're going to launch this digital economy and we're going to all switch. And I'm like, nobody freaking understands how it works. Okay. Like 90% of people
adoption, where you're on the adoption curve is.
And like, how are you gonna go through that? Did you think about it? Because that's a recurring issue for all of these companies, right? It's like being able to educate, understand your market, understand the gaps, and understand what needs to be fixed in order for you to go big and go home. And then also there's luck, and that's just what it is. I mean, sometimes it literally is that you were, you know, an hour early to a meeting before your competition came to the same investor and got that check, and you snatched it out, right? Or like luck in terms of finding amazing, like a lot of people ask, like, how do you find great co-founders or team members? And we can talk for hours about, you know, all of these HR strategies and like psychology tests and all that stuff. In the end, it's all about luck. Like, were you in the same, like Brett and I, pure luck, we just ended up working in the same
think it's
environment.
More like fate. I feel like the universe brings people together, but that's a different ideological difference.
But yeah, but back to like this luck, and like things just happen around you, and did you take that opportunity or did you miss it? So I don't think there's a recipe out there, because if there were recipes out there for successful startups, there would have been a lot more of them around us. And like, what is successful startup? It's a philosophical.
Yeah, I think there's a lot to that. It's a really broad question.
Yeah, it's like, is Uber considered, or Twitter, a successful startup if they don't make money? You know, it's like,
I would think that all their investors think that those are really good companies. I think from the venture, you know, like as you're raising outside capital, right? Like success is going to be defined by how much capital you return to your investors, and what time frame, right? What's the IRR, right? Those are like the definitive ways. That's like saying what's a successful company, right? Like we're starting companies, as Catherine said earlier, to make money, right? So I would say, like, I think there's another piece of this question, and maybe I'm reading into it wrong, but it's like, you know, define what success means for you and figure out whether that means, you know, running a venture capital company, right? There are people that are definitely like thrive on this whole building quick, you know, big scalable companies, and, you know, being a thought, you know, like being on all these speaking things, or being, you know, someone who's renowned in your industry as the definitive expert. And so if that's your goal, right, then go make that happen. But if your goal is to just feed your family and have a great lifestyle, like the venture capital, you know, raising from this pool is not a good, it's not going to be a good source, right? No one's going to consider it a success, right? Because you're miserable, or your investors aren't happy with you, right? So I'd say define what success means for you and figure out if it fits into that definition of what venture capital considers success, right? Because it's like, we're doing this as a day job to make money, right? And we're also passionate about what we do and what we want to bring into the world, right? So if it's, yeah, just kind of define what success means for you, I think is a starting point to answering that question. Other piece I want to add on to this luck thing, not to go too deep in here, but I don't know that I definitely believe in luck. I believe that we attract the type of people that we are and what we need. And I think the harder you work and the more you put yourself out there, the luckier you're going to be, right? Like the things like that I built out in the last 6 years is because I made a major decision to move, not from a foreign country, but practically from a very small market in the Northwest to go to San Francisco, and I worked freelance jobs, and I basically did like reverse outsourcing. So I was building products and services for people in like Singapore and stuff, as I lived in the most expensive, you know, city in basically the world, right? So it's like the luck I had was because I put myself in a situation where I was around other people where there's opportunity to be successful, and then I had to make it happen, and it was honestly out of pure just determination and perseverance that I got any of the traction that I got. So, and I think like, you know, I think like foreign, you know, entrepreneurs definitely like define the American dream and have like a hustle that the average American probably doesn't have. So I think there's just different advantages that being there's obviously things that work against you, but there's definitely like, I think, inherent traits that make like a foreign, you know, person who really wants to make this happen. Like you just got a different hunger and a different like, than you're going to see with the average person that's just thinks they can show up and collect a check.
Amen to that.
I thank you very much for this awesome conversation, for this awesome talk. We managed to open this Very kind of difficult topic and discussed interesting details. I think not everyone think obvious for everyone. I thank you, Brett and Catherine, for your time. You are top managers of UnVentures, so and definitely giving us almost 2 hours and sharing this expertise is a great value. And for everyone, you may meet Brett and Catherine in a couple of days on our next session on June 22nd. They will be also part of the judges and investment team for our live pitch for global investors. So please use this opportunity if you want to pitch that, and you can sign up for that event on our social media. And Brett, Catherine, I invite you to also use our network of startups to build your funnel. If it can bring any interesting project to you, just we'll be so excited. And we have a lot of interesting founders, and we are growing very fast. So I'm sure our community can be a good place to spot some good ones.
Perfect. Thank you so much for the opportunity.
Thank you. Thank you. And a few last words about the upcoming events. So just I mentioned about live pitch to global investors that will happen June 22nd on Monday. And this is the list of judges, investors that will participate, all Americans, and it will be very interesting. So I'm currently selecting good startups. I already have a bunch of requests, so use this opportunity. Steve Hoffman will be talking to you about raising venture capital in Silicon Valley and in China. Kate Silidets will talk about 500 startups and how to get into their newly formatted program. We will talk about third part. Evgeny Dukhovny will present the third part of his history of Silicon Valley, which is very interesting way he presents. And Rod Tutayev will talk about regulatory aspects for startups to know before they get to US market. And we also have networking events with founders to help each other in Russian and in English, so join us. And this is the QR code to scan to get to our Eventbrite page. Basically, just find Go Global Russia, Go Global World there, or scan this QR code. And all the news and updates will be shared on our social media. Just mention UnVentures was our partner today, and also our partners RootsBase, IB Consultants, Technopark Skolkovo, GSD Venture Studios, and Moscow School of Management Skolkovo. To see our updates and new events, you need to be on our network. So don't forget to sign up to our Facebook page, find the group of your country, join our Telegram channel, Go Global Russia in English, and we're also on LinkedIn. And this video will be on YouTube channel, Go Global World. So like it, share it. It will help the community to be noticed in searches, and let this content be available for people in different remote parts of the world. So with that, I thank you very much to you all, and I'll see you soon, and have a great day. Goodbye, guys.